Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 2nd, 2024, and we're diving into the latest earnings report from RBC Bearings, a leading manufacturer in the industrial, defense, and aerospace sectors. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. RBC Bearings has just released their fiscal second quarter 2025 results, and there's a lot to unpack, from their sales performance to strategic outlooks.
Revenue and profitability overview. Let's start with the top line. RBC Bearings reported net sales of $397.9 million for the second quarter of fiscal 2025, marking a 3.2% increase over last year. John, can you break down these numbers for us?
Absolutely. The growth was primarily driven by a 12.5% increase in the aerospace defense segment, which offset a 1.4% decline in the industrial segment. The gross margin also improved slightly to 43.7%, up from 43.1% last year, indicating better cost management and pricing strategies.
Operational efficiencies and future outlook. Despite the revenue growth, operating income saw a slight decline. What factors contributed to this, John?
The decrease in operating income to $86.1 million, down 1.9%, was mainly due to higher SG&A expenses, which rose to $69.5 million. However, net income increased by 5% to $54.2 million, thanks to reduced interest expenses and effective tax management.
And looking ahead, what can we expect from RBC Bearings?
The company projects net sales between $390 million and $400 million for the next quarter, with a gross margin of 42.5% to 43.5%. They are optimistic about continued demand in the aerospace defense sector, despite some challenges in the industrial segment.
Strategic initiatives and market position. RBC Bearings has also made some strategic moves recently. Can you tell us more about their backlog and preferred stock conversion?
Sure. The backlog increased to $864 million, reflecting strong future demand. Additionally, the conversion of preferred stock to common stock will save the company $23 million annually in dividend payments, enhancing their cash flow.
And what did the CEO have to say about their market position?
Dr. Michael J. Hartnett, the CEO, highlighted robust demand in the aerospace defense sector and expressed confidence in the industrial segment's ability to outperform industry trends despite a slight sales decline.
Financial health and risk management. Let's discuss RBC Bearings' financial health. How are they managing their cash and debt levels?
RBC Bearings reported $89.1 million in cash and equivalents, with long-term debt at $1.1 billion. Their effective tax rate decreased slightly to 21.9%, and they generated a strong free cash flow of $140.4 million, indicating solid financial management.
Are there any risks investors should be aware of?
While the company is performing well, potential risks include geopolitical factors and fluctuations in aerospace and industrial market activities. However, their strategic initiatives and strong backlog provide a buffer against these uncertainties.
Key takeaways. In summary, RBC Bearings has delivered a solid performance this quarter, with notable growth in net income and aerospace defense sales. The preferred stock conversion is set to provide significant savings, and the future sales outlook remains positive. John, any final thoughts?
RBC Bearings is well positioned for continued growth, especially in the aerospace defense sector. Investors should keep an eye on their strategic initiatives and market conditions, but overall, the company shows promising prospects.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on RBC Bearings' performance in the comments below.